More volatility across China's markets. The People's Bank of China devaluing its yuan in a surprise move to align the currency more closely with global markets. The yuan posting its largest one-day drop in over 20 years, strengthening the U.S. dollar. The move also comes as China seeks reserve currency status from the International Monetary Fund, which says the currency isn't priced by markets. That's because the yuan is only allowed to trade 2% above or below the U.S. dollar. Meanwhile, stocks in China reacting modestly to the news, with the Shanghai Composite Index closing Tuesday's session flat. Meanwhile, TheStreet's Jim Cramer says China is part of the trade war against the United States.
Japan's been part of it, Europe's been part of it, and we don't really seem to want to acknowledge it. It's because our economy is a little bit stronger, but everybody wants a piece of our business, and I think that everyone wants us to not be able to sell as well.
Plus, a weaker yuan is strengthening an already strong dollar, which could hurt U.S. companies with exposure to China.
You'll see all the stocks that are our export stocks to China really getting killed today.
Shares of Caterpillar and Boeing posting losses on Tuesday. Meanwhile, a stronger dollar could also throw a wrench into the Federal Reserve's plans to hike short-term interest rates, which would also put upward pressure on the greenback. But there are some stocks which Cramer says are immune to China's woes that may be worth investing in.
I think that Walgreens is very good. You know, that's right up there with CVS, definitely in terms of like being able to buy something that I think does well in this environment.
Cramer also likes Shake Shack and White Wave Foods. For TheStreet, I'm Gamm in New York.